Right. Hey, good Wednesday morning to everyone. Welcome to our Whittaker and Company weekly leadership call, June 3rd, 2020. Wanted to share a couple of things with you guys. Today is going to be a quick call here. The first thing we're going to talk about is an update on the Paycheck Protection Program, kind of where things stand there, the changes that have happened in the last 2 weeks. And then second, we will get into how to account for the monies that you may have received under the Paycheck Protection Program. So the first thing, I think we talked about this a couple of weeks ago, is that the IRS issued Notice 2020-32, which talks directly about the income that you received from the PPP loan as not being taxable, but the expenses that you pay with the PPP money as not being tax deductible. So in effect, all of those compensation expenses, rent, utilities, et cetera, and the things that you pay with that PPP money, it would actually be considered non-deductible expenses. I don't think that that was the intention that Congress had when they put that together. So early in May, Senate Bill 3612 was introduced. It's currently still sitting in the introduced phase that you can track that. You can go onto, you can just Google it, Senate Bill 3612, and it'll kind of show you where it is. It's still been introduced, has not been discussed further, but what they are trying to get taken care of in that bill is the fact that the money you receive from the PPP will not be taxable income. And then secondly, that the expenses that you pay with the PPP money will still be tax deductible. So that's the first thing that we have there, is the kind of the changes there that are hopefully pending. The next thing that I want to talk about here is the 8-week rule and the 75% payroll rule. Again, I might have alluded to this earlier. There's been a lot of discussion, especially with companies like restaurants and retail stores that have not been able to open back up, that they received their PPP money and they had 8 weeks to spend it as of, 8 weeks winding up June 30th. And what a lot of them have come back and complained about, and rightfully so, is that these monies that they received, they can't even use because they can't even open their businesses. So there is now talks in the government that the 8-week rule may be extended to 24 weeks, and that the rule about 75% of the monies being spent on compensation, employee compensation, may actually be reduced to 50%. So again, this is, I wouldn't even say this is pending yet. I would say this is in, it's in some discussion phases, and we have not gotten any further information on that yet. The next thing I want to talk about is the accounting for the PPP loan. And now that you receive the money, how does this get on your books? So US Generally Accepted Accounting Principles, or GAAP in our term, does not currently have guidance that specifically addresses the treatment of a forgivable loan from a government entity. Absent specific guidance, it would be acceptable for to account for the PPP loan under Accounting Standards Codification, or ASC 470, which on the basis of their legal form, it would be treated as debt, even if it was going to be forgiven. Alternatively, businesses may want to characterize the loan as an in-substance government grant. So here are a couple of things to think about. When treating the PPP loan as debt, several accounting principles come into play. The full amount of the loan is recognized as a liability, so it goes on the balance sheet as a liability. Interest is accrued at the program's specified rate of 1%. Third-party expenses incurred in connection with the loan, such as professional fees, can be deferred and amortized over the lifetime of the debt obligation, which would be the 2 years. The loan will remain recognized as a debt until the government issues a formal notice of forgiveness in response to the business's loan forgiveness application. I think we've talked about the loan forgiveness application last 2 weeks ago. And then the loan proceeds and repayments will be treated as refinancing activities for cash flow purposes, for cash flow accounting purposes. So that's where that would go on the statement of cash flows. Some businesses may want to characterize their PP loans as an in-substance government grant under the International Accounting Standards, or IAS 20. And it's important to keep in mind that US GAAP has no provision for treating forgivable government loans, such as those under the PPP, as grants. Therefore, businesses that follow strict GAAP approach may not have this option. I'm not sure how many of our clients that actually is going to apply to. Not like we don't have publicly traded clients. All of our clients are closely held businesses or family businesses. So that's probably is going to be okay to account for this as an in-substance grant. And the main objective of accounting for government grants under IAS 20 is for an entity to recognize the grant in the same period or periods that it recognizes the corresponding costs on the income statement. The grant approach relies in part on the company's assumption that the loan will be forgiven, which is, I think, is where most of our clients are. In essence, the company's compliance with forgiveness requirements is treated as consideration for an income grant. So on the entity's income statement, the grant can be presented either as a credit or an increase in income, or as a reduction in the expense line item that it's intended to defray. So you can either record it as income, either as operating income or other income, either one will work, or you can record it as an offset to the expenses that you're paying. So you could record it as an offset to your payroll expenses, an offset to your rent expense, et cetera. When taking the grant approach, you need to continuously monitor the likelihood that it will qualify for forgiveness. To the extent that part of the loan proceeds may not be repaid, so if you don't repay them, that amount booked as revenue will need to be reversed and put back on the books as debt. So what that means there is, if not all of the loan is forgiven, the amount of the loan that's not forgiven will go back onto your balance sheet as debt and will be treated as debt going forward. So those are the quick couple updates that we have for you guys. Hope you're doing well. Hope things are good. If you have any questions, please feel free to reach out to me at any time or reach out to my team at any time, and we would be glad to help you out. Hope all's well, and hope you guys stay safe. Thanks.